Overfunding is not a legitimate term in reference to infinite banking or whole life insurance. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our EncycloMedia series, I want to address a common term in the infinite banking whole life insurance footprint that doesn't belong there. It's called overfunding. Now, definitionally, the act of providing or receiving more money than is needed or allowed for a particular purpose is the definition of overfunding. Let's just break that down. It's an illegitimate term for whole life insurance because if overfunding is referring to premiums paid into whole life, it must be allowed first. I mean, a whole life insurance policy that's with a mutual company that pays dividends, the type of policy that's used for infinite banking, as described in R. Nelson and Nash's book, Becoming Your Own Banker, is a contract, a legally binding contract. So if you have requested and applied for a policy to pay a certain amount of premium, and you pay that amount of premium to an in-force policy, you're not paying more than you are allowed by law. Literally, actually, you're just paying the premiums that that policy has been built to receive. And there can be flexibility around premiums, and folks are trying to use this word overfunding to emphasize the high, significant early cash value that can be built in an IBC style whole life insurance policy. And I understand that. I own and want to own and help folks get properly structured policies that have significant cash value to use for privatizing the banking in their lives. But overfunding definitionally just doesn't fit. It's a misnomer. It's an error. It is illegitimate. So again, if I had a $10,000 a year policy, I chose and wanted to pay $10,000 in an ongoing fashion into my policy. And yes, a portion of that's going to go to the base policy itself. A portion of that is going to go to the paid up additions rider. A portion may go to other riders. But whatever the premium is that I am paying to have this policy, to own this policy, to fund this policy, it can't be overfunding if that's the number. If that's the number that's allowed, if that's the number that I can pay in this policy. If I pay a $10,000 premium that I've applied for, been approved for, had that policy issued to me, and I pay $10,000 in premium, I'm not overfunding that policy. Now, if that $10,000 premium creates a significant cash value based on that premium relative to that premium, at least in its early years, in the beginning years, when a policy is just in its capitalization phase, that's not me overfunding the policy. In fact, that's me capitalizing the policy, meaning that if I pay $10,000 in premium, I'm not going to get to access all $10,000 in year one, in year two, in year three. And it can take several years, and in fact, should take some time before you get to where a policy goes dollar on dollar, so to speak. When you hit that tipping point of you have had the policy in force for a number of years to where the premium dollars that you are paying in that ongoing fashion are exceeded by the amount of cash value that's created that you have access to use for practicing infinite banking. But at no point is that overfunding a policy. So I understand maybe it's an attractive marketing word, and I'm out here promoting and educating and putting hundreds of hours of content, hundreds of videos on YouTube and on our podcast, on the website, sharing, promoting the fact that you can become your own banker. But overfunding, I'm not actively using that word myself, because I think it's an illegitimate word in regards to infinite banking and whole life insurance, and yet I did want to address it here in our EncycloMedia series, because it is very likely that folks will come across that word. And I recognize that this word is being used by agents. It's being used by home office personnel from insurance companies. It's being used by consumers who are just repeating what they've heard. But again, there are legal limits. Insurance is a highly regulated product. Every state has its Department of Insurance. And there are legal limits in these contracts based on its type, based on the structure, based on the riders that are attached to the policy, the insured's age, your income, etc. And these are all factors that go into how a policy should be structured, in my opinion. And by staying in these parameters, we are definitionally not overfunding a policy. Now, I have covered this idea of overfunding a whole life policy more at length and with a different context in another of our series, which is called the Myths, Mysteries, and Misconceptions series. Episode number 3. I'm going to encourage you to check out episode number 3. I address overfunding again there. And if you'd like to have a conversation about what it could look like for you to implement the infinite banking concept into your household or your business or your investing, then don't hesitate to get in my calendar. You can find me at durhamtalents.com. This has been a great pleasure for me. I look forward to our next conversation. I hope you have a great day. Take care.